Welcome back. Let's get a tilt of how the markets are looking then this afternoon trade. Seems to be a negative day across most of the indices, with the Shanghai composite there going down 1.9% early on this morning. That has unfortunately not made any dent, however, in the European trading picture. That seems to have gone all positive. More than 1% gained across the board across the European markets. Then the main indices, such as the FTSE 100, going up 1 2/3% then, so better off on that front. Just over 1% gain for the CAC 40 out in France. Locally as well, we're nearly 1% to the good, 54,400 points. It was a bad week last week to close things off, but we're kicking things off on a much more positive note somewhat. The biggest gainers then today seem to be the platinum and gold mining shares, which means that the resources have gone up 2.5%. Industrials pretty much flat with a negative tilt over there, not really enjoying themselves, considering as well that the Asian markets did close in the red. You're bound to find the industrials go a little bit weaker, with Naspers, of course, his big shareholding in Tencent there being affected. Pretty much flat stance then for the banking counters, which means that the financials aren't gaining too far up either. South Africa's listed property also managing to gain 1.3%. In terms of companies that have gone up as well, Hammerson, Omnia and Sun International all headed up more than 6% there as well. Sun International nearly 7% to the good there at R11.97 a share on that front. In terms of negative counters then today, the stocks like City Lodge are now down 5.5% today, the biggest loser so far on the old share, with the likes of True Words as well going down. Imperial getting hammered 2 2/3% at this point as well. Onto the commodities board then, as you can see, the Brent crude prices got down 1 1/3%, so some immense weakness here. We'll talk about exactly why that is. Saudi Arabia, of course, having its fair share of a comment on exactly where the oil price will go. Platinum going up around 0.4%, still below that $900 a fine ounce mark. It seems demand really faltering on that front, so it isn't necessarily doing too well. And weakness then for the gold price, which is now at $1,928 a fine ounce. In your currencies then, weakness for the local currency, 16.75 then is how much a greenback will set you back. It's 19.80 for a euro. So still, even though we're getting some weakness, South African currency still lingering in better than 20 rand for a euro. The British pound is 22 rand and 3 cents. Let's have a chat then with Gary Boyson from Rand Swiss, who joins us here at the Johannesburg Stock Exchange as we unpack this market movement. Gary, thank you so much for the time. So weakness in Asia, Europe enjoying itself. The local market seems to be saying, okay, well, we fell last week, but we're better off this time around.
No, absolutely. So I think we've got to remember that it's the Labor Day public holiday in the US this evening. So you're going to see a little bit of the volumes coming out. I think it's also going to help to just arrest that slide that we saw in the big tech shares towards the end of last week. That big falls in Apple, Thursday, Friday, saw markets coming down. We also had a little bit of data around the US labor markets, which was actually pretty optimistic. And I think that's just helping to fuel a little bit of optimism that the US, the world's largest economy, is obviously getting back on track fairly quickly after the COVID pandemic.
Yeah, if you talk about that unemployment number, I mean, from 10.4% to around 8.2, I think it is. Man, we wish we could get similar data, but tomorrow we have our GDP numbers coming out for the second quarter here in South Africa. There are expectations that it could have halved. Our economy could have halved in that second quarter.
Yeah, so if you look at the South African numbers, remember this is the number that's being reported is the number that was directly over lockdown. So this is when businesses were actually shut. I mean, you had almost the whole restaurant service industry not contributing anything. So the predictions across, I think it was 13 economists, is to have a 49% slump in second quarter GDP. Longer term though, the estimates are fairly diverse. So most of that actual economic activity is going to come from that agricultural sector. But if you look at where we're going to land for the year, which is I think more relevant to people, because we understand that things were tough in the second quarter, but how fast are we going to bounce back? If you look at the bank estimates, they're saying that we'll end around between 8 and 9% down in terms of GDP for the year. Independent estimates are saying as much as 16% down for the year. So there's quite a widespread on how fast our recovery is going to be in the next couple of quarters, and that's I think that's really key. I mean, how fast can we get back to work? How fast can we become productive again?
Yeah, the consumer confidence data though did get a little bit better off today in terms of its outlook. Does that bear sentiment to perhaps a marginal improvement of sorts for the third quarter for our economy?
Let's hope so. If we obviously chat to a lot of business owners, and I mean, consumer confidence is a survey of what you can expect going forward. And it's interesting, you get the guys that really have just been pummeled, they've just been in the wrong industry, the wrong sector, they haven't been able to conduct business and are in real trouble. On the other hand, there are certainly very interesting companies that have managed to almost thrive in lockdown. I mean, you look at the tech companies, guys that are doing tech rollouts, the big one would obviously be Microsoft, but there's a lot of implementation companies in South Africa that are doing well. You look at some of our listed companies, the likes of Metrofile, AVI releasing results today, AVI paying a dividend, Metrofile saying that headline earnings are going to be up up as much as 25%. So it's that was in a trading statement. So there are still sectors of huge optimism, and it's really, I think, for South Africa, it's about trying to focus on the businesses that are going to recover quickly and that can create jobs and create economic activity, and us helping them along.
Yeah. Where does AVI make that, get the ability to pay out a dividend? I mean, revenue only rose 0.4%. Gross profits were down for the time span. So why exactly would you be willing to pay a dividend in a time when perhaps you should be conserving as much as possible to aid the business's growth for future?
Okay, so there's a couple of factors here. So one, AVI is a very conservatively managed business. So you're far more conservatively managed than some of its competitors, and that, I think, gives it a degree of resilience. It has a pretty strong balance sheet. At the same time, they sold a business in Australia, I think it's called Simplot, for I think it's about 630 million. So the overall dividend that they're going to pay is, I think it's between 800 and 900 million. So they have essentially cash flow coming in from that deal as well. And at the same time, it's not just a dividend. It's a pretty chunky dividend. I mean, it's not just a dividend that they've cut. This is, they've maintained their dividend level from previously. But I think you've got to remember that AVI as a business, I mean, yes, they have their apparel business, which obviously, was affected by lockdowns. But the likes of Bakers, I think, and Five Roses, people drinking more tea and biscuits over lockdown. And we saw it in the revenue numbers as well. So we saw, revenue, I think it was in the Bakers line, up 12%. So it's a resilient business. It's not just that it's conservatively managed, it's also essentially a consumer staple business as well, and that just gives it this I suppose robust nature.
Quite interesting then. Let's get onto that oil price then. Yes, it's been trading within a range, but 42 is a bit low on the scale of this range, isn't it? Saudi Arabia having a say in that number?
So if you look at it, the oil price obviously has recovered, dramatically from when we were talking about negative oil prices earlier in the year. And this has really been on, I suppose, deep supply cuts coming out of OPEC Plus, so Saudi Arabia, but also Russia. I think what we've seen now is just the sales of some contracts on specifically a type of crude into China, essentially being discounted. So Saudi Arabia is saying that they're going to sell oil slightly cheaper. And this, they don't naturally just go out and say we're going to, sell oil for 5 months later cheaper. It's because there is a lack of demand. And I think what's happened globally is we had an incredible amount of supply earlier in the year. And yes, the production cuts have helped to just alleviate at least building up bigger inventories, but the demand hasn't recovered as fast as people expected. And it's not just that there's no air travel at the moment, it's also that I think the nature of our economies is changing too. So the likes of everyone moving to Teams or Zoom or whatever it may be and trying to work from home, it means less cars on the road, it means less demand, even though those roles are being fulfilled within the economy, those jobs are still active and the people are still working. They're not consuming oil in the same way as they used to.
No, they certainly aren't. Look, I'd be remiss if I didn't ask you very quickly though. Clicks getting a bit of a hammering on the physical front, if you want to call it that, of course, after their little issue. Do you think investors will take unkindly to what has happened of late? I mean, share price isn't down too much, only 0.2 odd percent. Not much of a hammering there either. Yeah,
I think you look at someone like Clicks. It's always unfortunate, of course, but I think protests need to be done within the law. Number one, but. I think investors try to look through that kind of thing, and I think a lot of the South African stocks have significant risk premium built into them as well. So it's let's see what happens with the share price.
Yeah, going to be interesting. Gary, always great chatting to you. Thank you so much for the time. Gary Boyson there from Ransus joining us and helping us unpack that market movement as well. We take a short ad break though. When we get back, we've got some more news for you. Stay tuned.